Don't throw away $100 to an accountant to file your taxes. For the vast majority of Canadians, you can do it yourself, and I'll show you how. Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll show you how to file your taxes step by step. I'll cover the basics of how your tax bill is calculated, and I'll do a step-by-step walkthrough on how to file your tax return using TurboTax. That's what I've been using for over a decade. It's super easy. But you can also use Wealthsimple Tax or UFile. It's the same steps. It's been 5 years since my last tutorial, and since then, there have been some big changes. For example, the entire section on work from home tax deduction, that's completely gone. So this is the new version for 2026. Today, I'll be focusing on the tax filing steps for all Canadians. This includes employment income from T4 slips, interest from savings accounts, RRSP deductions, tax credits, and other deductions. When it comes to business income and investment income in a taxable account, so outside of a TFSA or RRSP, tax filing becomes more complex. That's when an accountant is actually worth the money. But for Canadians who work a job, I promise it's super easy to file your own tax return, and I'll show you. Before we get to the tutorial, let's start with how your taxes are calculated. Step 1, you enter your gross income. This is how much money you made in the year before any taxes or expenses. For most Canadians, this gross income will be their salary from their job. If you also earned investment income, so interest, dividends, or capital gains in a non-registered account, so outside of your TFSA or RRSP, that goes into your gross income. If you run a business as a sole proprietor, then your business income gets included too. If you're a landlord, include your rental income. If you withdrew money out of your RRSP, hopefully in retirement, then include this RRSP withdrawal as well. All of these get added together for the year, and that's your gross income. Luckily, we don't get taxed on this full amount. We apply tax deductions to lower our taxable income and save us money. That's step 2. The most common deduction available to all Canadians is the RRSP. Whatever you contribute to your RRSP, you can subtract that amount from your taxable income, so you pay less taxes. There's also the work from home tax deduction. I have a whole video on those recent changes. If you run a business, you can also claim business expenses as a tax deduction, so you only get taxed on the net income. This is huge and one of the best benefits of running a business. Check out my business series for all the details. Now, step 3, we have our gross income and we subtract all of our tax deductions, giving us our taxable income. This is the amount that we actually pay taxes on. Our taxable income is what we put into our tax brackets to calculate our tax bill. You don't have to do any math. TurboTax calculates everything for you. If you need a refresher on how taxes work, tax brackets and all that, make sure you watch my taxes explained video right here and then come back. Now, step 4, we get to reduce our tax bill even further by applying tax credits. Tax credits will reduce our tax bill by a fixed amount if we're eligible for them. Unlike a deduction, your income or tax bracket doesn't matter. Everyone benefits equally. It's a fixed amount. There are tons of tax credits out there, both federal and provincial. But good news, TurboTax will automatically find the ones you're eligible for. The most common tax credit that applies to everyone is the basic personal amount, which saves each of us about $2,300 in taxes. Because of this credit, we don't pay any taxes on our first $16,400 of income. This is important. Tax credits can either be refundable or non-refundable. A non-refundable tax credit can reduce your tax bill to 0, but it will stop there. A refundable tax credit can drop your bill to 0, and if there's anything left, then you receive cash. Step 5, net income minus tax credits, we get our final tax bill. But you've already paid taxes throughout the year. Remember, you get taxes deducted from every paycheck. So if you contribute to your RRSP, you've probably paid more taxes than you should have. In that case, the government owes you money and you'll receive a tax refund. That's just for a job with a paycheck. If you have business or investment income, that hasn't been taxed yet, so you'll likely have taxes owing. So that's how you calculate your taxes in Canada. Now let's do a step-by-step tutorial. At the end, I'll compare the different versions of TurboTax. I'm using standard, and use my referral link down below to get a discount. Let's jump in. Here we have TurboTax Standard Edition, and we will be starting a new tax return. Make sure you select the easy step method. TurboTax will guide you through everything. Super simple, they'll ask you questions, and it's very intuitive. Forms method is the old school, pen and paper way. It's super complicated, don't do it. Like I said before, the Standard Edition covers 8 tax returns for 8 people. That's what I do. I share it with my family and friends. Here we see a list of the tax changes for 2025, starting with the federal changes. Carbon tax is gone, but so is the carbon tax rebate. There's no changes to the capital gains inclusion rate. And then down here, we see the provincial tax changes. I live in Ontario, so you can see what changes there are to provincial tax credits and that kind of thing. So here's the TurboTax interface. At the top left, you will see a live running total of your tax refund or tax owing. Every time you enter a number, it's going to be automatically updated. In the left panel here, you can see the navigation menu. We can skip ahead to any section and backtrack if you want to change any numbers. And at the top right, we have the tools bar. Right here is the workflow. TurboTax will guide us through the entire process. We start by building a profile. It'll ask us a series of questions to find out what exactly we're eligible for. Then we start by entering our gross income and our expenses to find our net income. Then we move on to the largest tax deduction, and that is the RRSP and FHSA, First Home Savings Account. After that, we do the other tax deductions as well as tax credits. Now we're done with the federal portion. Then we move on to the provincial section where we look at our provincial tax credits. Then we do a final summary, and then we submit and save. Start with the personal questions. It's very self-explanatory. I'll go through it quickly, starting with marital status. And at the end of the year, which province did you live in? Contact info and social insurance number, mailing address, residency status. I am a Canadian resident, meaning I've lived in Canada for more than 6 months of the year. Bankruptcy, disability. Now this is a big one. Is this your first time filing a tax return? If you have filed a tax return before, you could transfer over information from a previous year, such as unused RRSP contributions. But you will have to enter a net file access code. You can find this in last year's Notice of Assessment or NOA form. You'll see this access code at the top right underneath date issued. Just enter that code. For the purposes of this tutorial, I'm going to pretend this is my first time filing a tax return. So starting from scratch. Did my marital status change? Nope. Do I have any children or dependents? Nope. And am I going to be transferring any tuition credits from a child in college or university? No. Now it's time for our profile. It's going to ask us a series of questions asking how we earned income in the year. So did I work? Yes, I was employed and I received a T4 tax slip from my employer. If you worked a part-time or full-time job, you're going to be checking this box. So the majority of Canadian. If you're receiving a pension income, you'll have a T4A slip. For me, none of these apply. Employment expenses, this includes home office expenses if your job required you to work from home. I'm going to click yes and go through that because I know it does affect a lot of you guys. Now, did you receive any retirement income? If you collected old age security or you made an RRSP withdrawal, select those boxes. For me, it's all no. Now, did you receive any investment income? Again, I'm not going to be covering investment income in this video. That's a whole separate video. However, if you did have investment income, dividends or capital gains in a non-registered account, you will receive a T5 slip, a T3 slip from your brokerage. Again, I'm not covering dividends or capital gains in this video, but I will be covering interest income. All Canadians must have an emergency savings fund. And in that savings account, you will earn monthly interest. That income needs to be reported and you'll receive a T5 tax slip from your bank. So select T5 and I'll show you how to enter that information later in the video. Do I have any investment income not on a tax slip? No. Did I buy any stocks or ETFs? You can say yes. You don't get taxed for buying an investment, only when you sell it for a profit in a non-registered account. I'm going to skip the rest of the investment questions. Did I sell any investments? Did I have any investment expenses? Did I sell crypto? I'm saving that all for a whole other video. Likewise, we have self-employment or rental income. That's business income. That's going to be a whole other video. There's so much to break down here. In this video, I'm just talking about employment income. Did I own any foreign property? No. Now, this section is all about students. If you're a student and you pay tuition, you can claim a tax credit to lower your tax bill, either for the student or their parents. Likewise, if you took on a student loan, the interest you paid on that loan can also lower your tax bill. So that was our income. Now we have to talk about how we spent our money. This includes the RRSP, FHSA, and expenses. Starting with the RRSP. Do you have an RRSP? I hope the answer is yes. Did you make any contributions to the RRSP? Yes. Did you contribute to the RRSP last year in 2025 or the first 60 days of 2026, so January or February? If yes, check off this box and you will receive an RRSP tax slip from your bank or brokerage. We'll enter that later in the video. Do I have any unused RRSP contributions from previous years? No, but what I will cover today is this box right here, if you'd like to carry forward an RRSP contribution for a future year. We'll get to this later in the video, but this can save you a ton of money if you think you'll have a higher income or be in a higher tax bracket next year. Now, RPP, does your employer offer a registered pension plan? Basically, this means, does your employer automatically deduct money from your paycheck and contribute to your RRSP? And in some cases, they'll offer an RRSP matching. If that's the case, all of these numbers will be in your T4 tax slip. We'll get to that later. Now, lifelong learning plan or home buyer's plan, I'll cover this in a future video. What these allow you to do is withdraw money from your RRSP tax-free if you're using it to go back to school or to purchase your first home. The catch is that you have to repay that RRSP withdrawal over the next several years. Again, I'll cover this in a whole other video. Similar to the RRSP, we have the FHSA, the First Home Savings Account. Whatever you contribute to the FHSA, you can also claim that as a tax deduction. This account is by far the most powerful tax sheltered account if you're using it to buy your first home. So definitely take advantage of it and try to max it out $8,000 every single year. Watch this video right here to see exactly why you should prioritize the FHSA above all other accounts. And if you did contribute this year, you'll receive a T4 FHSA slip. Check that box off. Now for expenses. Did you make any donations? I'm going to say no. Moving expenses. Were you forced to move for work or school? No. Medical expenses. If you have significant medical expenses, definitely check this off because you can significantly lower your tax bill. However, it is a rather high threshold to reach. You can only claim medical expenses if you exceed $2,800 spent for the year. I've only ever claimed this once in my life, 2 years ago when I got laser eye surgery. For all other years, the answer was no. I just don't spend enough. Now, did I buy a home or did I sell a home? No for both. And do you want to claim a home accessibility or a home renovation tax credit? Check this off if you're eligible. Next, we have investment losses. Did you sell a stock or an ETF at a loss? This only benefits you if you do this in a non-registered account, so outside of a TFSA or RRSP. I'm going to say no. Were you a volunteer firefighter? No. Any other deductions? Scan through these, see if any apply. Now, tax installments. This is mainly for Canadians that run a business. In certain situations, they'll be forced to pay quarterly tax installments. For most Canadians, the answer is no. Now the fun begins. This is where we actually start entering our income and tax slips. A great feature is that TurboTax can connect to your CRA account and automatically import all of your tax slips, like your T4 from your job or your T5 from your bank. This is a great feature, I recommend it. It'll save you time and reduce the chance of errors. But for this tutorial, I'm going to do everything manually to walk you through the whole process. So I'm going to skip import. We start off with the most important tax slip, the T4. This is what most Canadians will be receiving if they work a full-time or part-time job. Again, from the previous step, I recommend importing this slip from CRA so that all these numbers are automatically filled in. But for this video, I'm going to enter everything manually. So here is my T4 from my company. I pay myself a salary. All you have to do is match the numbers in each of these boxes with the corresponding boxes here on TurboTax. This is the most important number, box number 14, employment income. How much money you earned in the year. I pay myself a salary of $90,000. So we enter that. Province of employment, box number 10, that's Ontario. Box 22, income tax deducted, that's how much money I've already paid in taxes throughout the year. Remember, every single paycheck I get, income taxes are automatically taken off. And I paid a total of about $18,000 throughout the year. Box 16, CPP, that's how much money I've contributed to the Canada Pension Plan throughout the year. This year I maxed it out, so a total of about $3,800. Box number 24 and 18 relate to EI, employment insurance. That's to help you out if you lose your job. For me, I'm self-employed and I only have one employee, so I actually opted out of EI. That's why for me, in my T4, both of those boxes are empty. But for you, enter whatever number you see there. Box number 16A, that's CPP2. That's the second level of CPP for people making above $74,000. I also maxed that out with a total of $188 last year. Fill out the rest of the boxes like box 26, CPP pensionable earnings. QPP, that's only if you live in Quebec. For me, it's 0. RPP contributions, box 20, we talked about this earlier. This is if your employer automatically deducts money from your paycheck to contribute into your RRSP. And if they offer an RRSP matching, that's going to be box 52, pension adjustment. I don't do that, so my numbers are all 0. These two numbers count as RRSP contributions, and so they will lower your tax bill. Now, if your employer offers you any other taxable benefits, let's say use of a company car, a company parking pass, anything like that, those numbers will be right here at the bottom of your T4 slip. I don't have that, so it's all 0, but if you do, enter the corresponding box number. A common benefit would be the employer dental plan, box number 45. I don't have a dental plan, so mine's going to be option number 1. So make sure you've entered all the boxes. Last thing on the bottom, or do you have any exemptions for CPP or EI? For most of you, the answer is going to be no, but for me, I am exempt from EI, so I select yes. Okay, so that is my T4. This is by far the biggest section of my tax return. As soon as I hit done, TurboTax is going to calculate all the numbers that I've given so far and determine if I still have tax owing or if I've overpaid in taxes. Let's see. So as of now, I'm now going to receive a tax refund of $400. That means I have overpaid in taxes. Remember, I have a salary of $90,000 and I've paid about $18,000 in taxes from all my paychecks, but TurboTax automatically applies certain tax credits or tax deductions, so that's why as of now, I've overpaid in taxes and I'll receive a check, a tax refund of about $400. But we're not done. We still need to enter more information, and this number will change every time I enter a new number. If you have multiple jobs, you'll have multiple T4 slips, and you have to enter each one. I only have the one job, so I'm done with my T4 slips. Next, we have the T5 tax slip. Remember, I have a high interest savings account, and so my bank will provide me with a T5 slip showing how much interest I've earned for the whole year. This right here is my T5 income statement from EQ Bank, Equitable Bank. That's where I hold my high interest savings account. EQ Bank has some of the best savings rates in Canada. I include a link down below if you want to sign up with them. Just like before, all we have to do is match the numbers. Good thing the T5 is really easy. Most of these numbers are blank. The only number I care about is box number 13, how much interest I earned throughout the year. $37.13. And the source of the interest is bank interest. All these other boxes you see here on a T5 relate to investment income, not for this video. Every time you receive a dividend tax credit in a non-registered account, so not a TFSA, your bank or brokerage will give you a T5 tax slip. So for me, I have multiple T5s. You have to enter each one. But for this video, I'm only showing you my T5 for my bank savings account. As soon as I click done, my tax refund should decrease. Why? I'm declaring more income. More income means I have to pay more taxes, and thus my tax refund goes down. Let's play with the numbers to test this out. Let's say I earned $1,000 in interest income. That's money I haven't paid taxes on it yet. So if I'm in a 30% tax bracket, I have another $1,000 of income, I'm going to owe an extra $300 in taxes. That means my tax refund will decrease by $300. Boom, that's exactly what happened. My tax refund dropped by $300. That's the cool thing about TurboTax. Every time you enter a new number, everything gets recalculated automatically. Next, we have the T4 FHSA. This is where we declare how much we contributed into our first home savings account. My FHSA is with Questrade. This is the tax slip I got from Questrade. And the only number I care about is box number 18, how much I contributed this year. I contributed the maximum amount, $8,000. All the other boxes are if I did an FHSA withdrawal or a transfer. I didn't do any of those. Now, as soon as I click done, it's not going to change my tax refund number. Why? Right now, I'm only declaring how much I contributed into my FHSA. Later in the video, I'm going to declare how much I want to claim as a tax deduction. Only then, when I claim the tax deduction, will it actually affect my tax total. Next, employment expenses. This one will really depend on your job. The big one here that will affect a lot of you guys is the home office expenses, if you're required to work from home. This is one of those tax deductions that completely changed in the past 2 years. Before, during the COVID years, all you had to do was enter how many days you were forced to work from home, and it would be a very simple calculation, no receipts, no nothing. Now, with the new changes, you have to get permission from your employer, you have to fill out Form T2200, it's a lot more involved. I'm not going to go over the details here, I have a whole video breaking it down step by step, so please watch that and then come back to this video. But super quick example, let's say your designated home office represents 15% of the square footage of your home, that means you can deduct 15% of those eligible home expenses. Let's say I spent $2,000 on utilities and $1,000 on home maintenance. Instantly, you see my tax refund increase. Why? I'm claiming a new tax deduction to lower my tax bill. And here you go. With these numbers, I have a $450 tax deduction. Remember, I'm claiming $3,000 of home expenses, and 15% of my home is designated as a home office. So 15% of $3,000, that's a $450 tax deduction. Next, we have our investment profile. Again, I'm not covering any investment taxes in this video, so we skip it. So here is my income summary. I have a $90,000 salary plus an extra $1,000 in interest income from my savings for a total gross income of $91K. Now we're going to try to bring this number down by claiming tax deductions to save me money. Now we have the RRSP and FHSA. These are by far the largest tax deductions for all Canadians. Here's what I checked off. I contributed to my RRSP last year, as well as the first 60 days of this year. I have RRSP contributions that I want to carry forward to a future year if my income grows, and I also contributed to my FHSA. What is your RRSP deduction limit? Basically, how much RRSP room is available to deduct. You'll find this number by looking at your previous year's Notice of Assessment, so our 2024 NOA. Scroll at the very bottom in the RRSP section, you'll see this line, RRSP deduction limit for 2025. For this example, let's enter $50,000. If you contribute to your RRSP, you'll receive an RRSP tax slip from your brokerage. Probably 2 or 3 of them. You'll receive one for all the contributions you made in the previous year, 2025. You'll also receive 1 or maybe 2 for all the contributions you made for the first 60 days of this year, so January and February. I have my RRSPs invested with Questrade, and here are my RRSP tax slips from Questrade. You'll notice these 2 important boxes here. This number tells me how much I contributed to my RRSP in the past year, and this box tells me how much I contributed in the first 60 days of this year, January and February. So let's enter the contributions made throughout 2025. That's the first number, $11,000. And the contributions made between January and March 2nd, first 60 days of 2026, that's the second number, $1,100. Keep an eye on this. As soon as I click done, you're gonna see a huge spike in my tax refund. Why? Because I'm now claiming a $12,000 tax deduction. That lowers my taxable income by $12,000. At a 30% tax bracket, that's going to save me $3,000 or $4,000 in taxes. Take a look. Boom, my tax refund just jumped up to $3,800. That right there is the power of the RRSP. We lower our taxable income and save a huge amount of taxes while we're in our high income working years and in a high tax bracket, and we delay those taxes for 20 years, 30 years until we retire. That's when we finally withdraw from the RRSP and we'll pay a much smaller tax amount on that withdrawal. Why? Because we'll be retired. We'll have a much smaller income, lower tax bracket. So I'm already getting a super juicy tax refund, but I'm not done yet. Now here's the question. I contributed $12,000 into my RRSP for this tax year. I could claim this full amount to maximize my tax savings for this year, but I don't have to. Instead, if I think that my income will grow next year and I'll be in a higher tax bracket next year, it might be worthwhile for me to carry forward some of those RRSP contributions for next year. Claim that tax deduction at a higher tax bracket, and that way I would save even more money next year. I have a whole video breaking down this strategy in detail. It's something I did many years ago when I was a student. If I claimed that RRSP tax deduction right away, it would have been a waste since I already had a very low income. Instead, I carried forward that to a year or two until I was working full-time. I was at a much higher tax bracket and I saved myself thousands of dollars in taxes. For this year, I'm already at the second tax bracket and I don't expect my income to increase next year. So I'm going to claim the full amount. But let's say I wanted to carry forward $5,000. All I have to do is enter $5,000 right here, meaning that I am claiming $7,000 as a deduction this year, and the $5,000 deduction will be claimed against next year's income. If I decide to carry forward, my tax refund will decrease for this year because I'm claiming a smaller tax deduction this year. As expected, my tax refund decreased by about $1,500. Feel free to play around with your numbers. I just wanted to show you how to do this carry forward amount. I'm going to go back and change this back to 0, meaning I'm going to claim the full $12,000 deduction this year. This is a cool RRSP wizard. It lets you play around with the numbers and see how it affects your tax situation if you contribute more or less to your RRSP each year. Now, this right here is for the FHSA, the First Home Savings Account, and this page is brand new to TurboTax for this year. To fill in the numbers on this page, you're gonna have to go onto the CRA account and look up your FHSA participation room statement. This just confirms how much you've contributed to the FHSA in previous years, how much you've carried forward, and how much room you have available. For me, I max it out with $8,000 every year, so my numbers are super easy. Scroll to the bottom of the statement and you're gonna see all these numbers to enter into TurboTax. Variable B, variable F, variable H. For me, all these numbers are zero. Super easy. Contributions made in 2024, I maxed it out, $8,000. I haven't made any withdrawals yet, so the contributions is the same here, $8,000. Variable F, zero. Variable H, zero. FHSA carry forward amount for 2025, again, zero. I max it out every year, nothing to carry forward. Same thing in 2025 and 2024, both zero. If you transfer anything from your RRSP or to your RRSP, you have to enter it here. For me, both zero. Total annual limit for 2024 and prior years, right here, $8,000. Total deductions from prior years, again, $8,000. Unused contributions available to deduct, for me, it's zero. I've used it all up. It would be nice if they had box numbers like they do with the T4 slips, but hey, maybe next year. Click continue. What year did you open the FHSA? I opened mine in 2024. So this year, I contributed $8,000 to the FHSA, and just like the RRSP, now I get to decide, do I want to claim the full amount this year, or do I want to carry some forward to next year and hopefully save more money if I'm in a higher tax bracket? But I'm going to claim the full amount, $8,000 this year. Keep an eye right here. As soon as I click continue, my tax refund is once again going to spike big time. If I claim an $8,000 tax deduction at a 30% tax bracket, my tax bill will decrease by about $2,400. So my tax refund should shoot up past $6,000. And that's what we get. I now have a tax refund above $6,300. Here we have the RRSP Summary. This right here is why I'm getting such a large tax refund. For the RRSP, I contributed $11,000 last year plus $1,100 for the first 60 days of this year for a total RRSP contribution of $12,000. I'm not carrying forward, I'm claiming the full deduction. Now we combine that with the FHSA. I contributed and I'm deducting the full $8,000 this year. So in total, I'm claiming $20,000 worth of deductions. That's why I have such a large tax refund. Those were our biggest deductions. Now we're going to do the rest of the tax deductions and tax credits. Scan through the list to see which ones apply to you. If you're ever in doubt, click on them to see some information on what the eligibility requirements are. For example, if you're buying a first home, or if you're renovating your property for accessibility. None of these apply to me, but like I mentioned earlier in the video, if you go to university, you have tuition credits either for yourself or to transfer to a parent, or if you have interest on student loans, this is where you'd enter all that information. Here's a summary of all my deductions. Remember, I have a $90K salary plus $1,000 of interest income for a total gross income of $91,000. Then we apply the RRSP deductions around $12,000 plus the $8,000 of FHSA for a total deduction of $20,000. Other deductions, we have about $700 that I've paid into CPP, plus the $450 of home office expenses from earlier. Now we take my gross income minus all of these deductions and we get my net income. Basically, my taxable income of about $69,700. I don't pay taxes on the gross income, the $91K. I pay taxes on the net income, the $69K. That's why I have such a large tax refund. I have overpaid in taxes, so the government owes me money. We reduce this even further with tax credit, starting with the basic personal amount. Remember, no one pays taxes on the first $16K of income, plus all the other tax credits that are applied automatically. TurboTax does it all behind the scenes. I don't have to enter anything. So my total non-refundable tax credits add up to about $3,000. Non-refundable meaning it can bring my tax bill to zero, but it stops there. Down here we have the refundable tax credits. These are even more powerful because if they bring your tax bill down to zero, you can actually get cash back. Sadly, I don't qualify for them, so for me, they're all zero. Down here, this is how much taxes I've already paid throughout the year from each paycheck, a total of $18,000. And remember, because of my significant deductions, about $20,000, I've overpaid in taxes. That's why I'm receiving a tax refund of $6,300. We finished the federal portion of my tax return. Now we cover the provincial section. I live in Ontario, so let's see what credits or deductions I'm eligible for. Here in Ontario, this is the list of all of our tax programs. If you're not sure, always click on them to see the eligibility requirements. This is a very popular one, the Ontario Energy and Property Tax Credit. This is great for low or middle income Ontarians, especially if you live in the northern parts of the province. For me, I'm not eligible because I have a pretty high income, but if you are eligible, make sure you check this off. All you have to do is enter your rent and property tax you paid, and you could collect around $1,000. Definitely take advantage of it. Here is a breakdown of my provincial taxes. Remember, federal taxes make up the vast majority, but in Ontario, I'm paying around $4,200 in taxes. I'm claiming about $800 in tax credits. And for the Ontario Provincial Healthcare Program, OHIP, I'm paying about $600 into it. Down at the bottom are all the provincial tax credits. I'm not eligible for them, but if you are, please take advantage of that money. Now it's time for the final review and submission. Here you declare your citizenship, do you own any foreign property, and do you want to use English or French? I do not have Indian tax status. If you do, take advantage of it. TurboTax will suggest some tips or ways to lower your tax bill even further. Make sure you go through those. A reminder to use your $7,000 of TFSA room. Always a good idea. Kind of like the tips, TurboTax will automatically provide some warnings to make sure everything is correct. Do you want to pay for any assistance or audit protection? For the average person, you don't need it. A summary of some of the tax credits TurboTax applied behind the scenes. Looks like I am not eligible for the Canadian Groceries and Essentials GST credit because my income is too high. That's okay, it's a good problem to have. And a reminder that the consumer carbon tax was removed, but because of that, we also lose the carbon tax rebate. So this is my final number. I'll be getting a tax refund as soon as I submit. Give it a couple of weeks, and I will receive a direct deposit or a check in the mail of $6,346. Fantastic. This is all thanks to the RRSP and FHSA. Use those deductions. Absolutely save a copy of your tax return as a PDF. Very important. Here we are at the finish line. All you have to do now is send your tax return through NetFile. Basically, TurboTax will send everything over to the CRA. Obviously, this is not my real tax return, so I'm not sending it, but follow the steps. It's super easy. And then you are done. Remember, the deadline is April 30th, so don't wait. So there you have it. That's how you file your own Canadian tax return. Any tax software will work, but I always use TurboTax Standard Edition. I get it for $45 at Staples or Walmart, and I can share it with 8 people. So it costs us about $5 each. Way better than spending $150 with an accountant. For TurboTax, they have more expensive options like the home and business version, but honestly, it's not worth the money. I could do all of my business, rental, and investment taxes with the Standard Edition. The premium versions just hold your hand a little more. Use my link below to get yourself a discount on TurboTax. Remember, the deadline to file your taxes is April 30th, so don't wait. If you have investment income in a non-registered account, then your tax return will be a little more complicated. I'll be making a whole video on that. Just make sure you're using the right brokerage for your investments. Personally, I'm using MOOMOO for my non-registered account. That's where I focus on capital gains for tax efficiency, and a lot of that growth comes from US stocks. That's why I love MOOMOO, for their super low conversion fees. I'm not kidding, they're 17 times cheaper than other brokers like Wealthsimple when it comes to US conversions. I cover this in detail in my recent video here. Use my referral link below for an awesome sign-up bonus. You'll get $300 if you deposit $5,000 or more, plus you'll get an extra $300 if you transfer $10K or more. That's free money, so take it and invest it. Make sure you watch the rest of my Canadian tax guide, my videos with the silver thumbnails. Thanks for watching, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.